With only 3 days remaining until the weekly candle close, Bitcoin is sitting in a delicate spot. In today's video, we're going to be diving deep into the higher time frame and short-term charts, discussing exactly what the price action is doing and what we expect next. Let's go ahead and jump in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be discussing not only the macro, but the short-term charts as well, going over the upcoming weekly candle close and why Bitcoin is in a delicate position on the weekly chart. We'll also be going into extensive detail on the shorter time frame price action, discussing exactly what is happening, what we expect to occur next, and the most important levels you should be watching from a structural perspective. We'll also be going over a momentum analysis, discussing the RSI and overall macro and short-term strength, and again, what you should be looking out for. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin, focusing on the facts, the data, the technical and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us over on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in loop of cryptocurrency, with Bitcoin, and the relevant economic news. If you are interested in taking your trading to the next level, you can join us over on VIP. We post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to our group chats, our general chat, our trading chart and education chat, our news chat, our help, our daily video, and of course, guys, everything else we have to offer. If you're interested in getting access to all of that, go ahead and contact us in the pinned comment for more information. You can also click these links. I'll see you in there. Let's go ahead and dive in. So starting on that market data, how are we looking? 24-hour volume is down 33.51%, sitting at a total of 209 billion. 24-hour liquidations are down a considerable amount, down 55%, sitting at only 180 million. Longs are contributing 108 million to that, and shorts are contributing 72 million. Looking at the recent price action very briefly, we did see a breakout of this descending channel formation, which was of course a great breakout. We did not push as high as where we were hoping, which was the 69k region. Breaking above 69k is essential for a continuation upwards, as we discussed in yesterday's video, and we'll discuss again in today's video. But in the last 24 hours, we have seen a slight retracement back to retest our major area of support, which is at 66 to 65.8k region, as well as retest the prior downtrending resistance. We'll come back and discuss this in a lot of detail. Moving over to the broader markets, the DXY has actually seen a bump up in the last 24 hours, breaking back above that downtrending diagonal resistance, which of course is quite surprising. Again, while we do remain above this downtrending diagonal resistance, we do expect the DXY to continue upwards to retest these local high points. That is again quite bearish for the broader markets if we do see a continuation. Moving over to the S&P 500 and Dow Jones, these markets are still looking very strong. Again, like we said, while we sit above that 5,100 level, we are expecting continuations higher on the macro. Not going to dive too much into the short term on these markets. I think it's quite irrelevant. Looking at the broader picture, only if this 5,000 level is broken and this 5,100 level is broken, and that is when we're looking for corrections back to these prior all-time high. On the short-term time frame, we are definitely approaching areas of psychological resistance, 5,300, 5,400, 5,500. As we are in uncharted territories, price discovery, we generally don't really know where the price action is going to reject from, as again, we are in price discovery, so you do have to pay attention to short-term developing momentum, as well as hypothetical areas of resistance, generally psychological whole numbers. Moving over to the Dow Jones, a very similar scenario over here. A large green candle taking us above that $40,000 region. Again, very bullish above over here. We would like to see that weekly candle close above 40,000 again. 39k is really that major area of support. A loss of 39k will result in a downtrend to around 38k, where we do have the high time frame support, and again a loss of 38k would result in a correction to the prior all-time high. Overall, while we remain above 39k, And most importantly, a weekly candle closes above 40K. We are looking very, very good. So let's go ahead and jump over to Bitcoin before we do a quick word from BitGet and BingX. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, BitGet and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the BitGet link and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, BitGet and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay team, let's go ahead and jump over to Bitcoin. So like we said at the start of the video, Bitcoin is in a delicate position. And this delicate position is in fact, this is in fact the price range basically between where we are exactly now, this 65.5K region and the 69K region. This is the range I'd like to define as the danger zone. So I'm just going to go ahead and put a D over there. The danger zone simply represents, again, the price range between the exact all-time high in 2021 at $69,000 and the highest weekly candle close we saw within 2021 all-time high, sitting at $65,570-ish. This is going to be the range of the danger zone. Now, the reason we call it the danger zone is because number one, it is a major point of high time frame resistance, and number two, it is a point of directional control. Directional control meaning it will determine the directional move Bitcoin will undergo, which could last many, many weeks or even months, depending on the direction of which the price action breaks through this range. So for confirmation of a breakthrough, we are looking specifically for a weekly candle close, and on the macro, we are looking for a monthly. We'll come back and discuss the monthly in a moment, focusing on the weekly for now. A weekly candle close below the prior weekly high in terms of the candle close of 2021 would result in this move being deviation above the high, and we could actually see a correction back down into that 60K region. Again, we'll come back and discuss this on the short term in just a moment. If we do close a weekly candle above 69,000, however, that is officially resulting in us entering a new price discovery range. We are essentially moving much higher, and it increases the likelihood of a monthly candle close above 69,000, which we would know triggers the parabolic phase of the 4-year cycle of the bull run according to historical data. So within 3 days and 1 hour time, we should find out the result of where we're going to close this weekly candle. If we close within this range, then it just stalls out the decision for another week, but ideally we would like to see it happen sooner than later. So we are watching out, and I'd highly recommend to pay attention to the weekly chart and watch to see where this candle closes. So let's go now talk about the impact this will have on the short term, and more importantly, how the short term can influence the directional break, whether it be up or whether it be down, and what impact those directional breaks will have on the macro price action. And then we'll come back and discuss the significance of 69,000 on the monthly chart. So let's move over to the short-term price action, guys. A quick summary of what we are seeing over here. Let's go ahead and just drag this down. What we have seen in the last 24 hours, we have seen the end of a downtrend. The downtrend lasted about 8 to 9 days. Established from our initial rejection point at 74,000 being the new all-time high for Bitcoin. The downtrend lasted around about 8 days, resulting in, again, lower highs developing as the price was trending along this respective downtrending trend line, and lower lows printing, again, as we were trending along the lower line of support, resulting in what we would know as a descending channel formation. This descending channel formation ended at a lower low in the major area of support at that 60K region, region, which we can see the wick coming down into the 60k region on that weekly chart. We did bounce on a level and we have broken above that descending channel formation, resulting in a nice move to retest our first level of resistance, as we discussed in yesterday's video, which was that POC range on the VRPV. What we can see now in the last 24 hours is Bitcoin has established a higher high. Okay, we have a higher high in comparison to our lower high, so we've established a uptrend over here, guys, and we have retested our prior range of resistance from a diagonal scale, our structural scale, as support, at the same time challenging a short-term area of support and macro area of support, which is going to be that weekly high, that weekly candle close from 2021. So you can see Bitcoin is an incredibly delicate position. So let's go ahead and talk about the directional moves which could undergo, what we would need to see for Bitcoin to continue higher, and what we would need to see for Bitcoin to continue lower. And again, the directional continuations we're going to be talking about directly impact the likelihood of a directional break on the weekly above or below the 69 or 65.5k regions. So on the short-term price action chart, at the moment, we are in a uptrend. Now, the uptrend will remain intact, guys, provided we remain above this black line over here. We're going to see the divot in the VRPV. This is $64,551 US. Again, this is a confluence point between, again, prior horizontal support and our diagonal trend line from our prior structure. So provided we can bounce from this range and push back above the 65,000 to 66,000 area of short-term resistance, we should be expecting a continuation back up to 69k. Now, it is very important to note the distance or the price range that I've just gone ahead and drawn out. This price range is a chop zone. It is irrelevant what happens between the price ranges of the upper, okay, and lower area. All this movement is irrelevant. All this movement is irrelevant. What is relevant is the directional moves above and below this range. This was a relevant move. This was a relevant move, this was a relevant move, and this will be a relevant move if it occurs. So if we're looking at the directional continuation in terms of strength, we would need to see for Bitcoin to continue up to 74,000, breaking through the 69k resistance, we would need to take a look at our overall strength. So the first one we're looking at is going to be this cluster of price action on the RSI, the second trend line, the lowermost trend line over here. What we can see, again, this trend line is respecting our macro and our short-term trend lines, or should I say our short-term trend lines on the price action chart, which is respective against that bearish divergence we had on the price action chart. So the bearish divergence over here, point number 1 lines up with point number 1 on the RSI, point number 2 lines up with point number 2 on the RSI and price action. This is reflecting the overall momentum since this point in price action to the current present day. What we can see is momentum has been falling, and for us to break above that 69k level and continue upwards, we are going to need to see this RSI trend line break upwards. If we see the RSI break upwards, you can see we annotated break this trend line results in a break of 69,000. If we break 69,000, we are expecting 73 to 74,000. So to go ahead and delete everything on the chart really quickly, again, for us to continue above this level, we need to see a break of that RSI. If we break the RSI, that is going to be the trigger for a directional continuation upwards. So will the bulls get back in control? Again, hard to say in the short term. We are in this neutral territory, provided this area of support which we are retesting is able to hold. There is no saying that they won't reclaim control. There is no saying that the bears are going to jump back in, provided we remain above this area of support, and then the RSI inevitably or eventually breaks, we should see that continuation upwards. If we want to see an even higher time frame continuation upwards, we're looking at, break of this prior resistance. That is when we're looking at our larger trend line on RSI. So we're going to see the second trend line on RSI we're drawn out is going to be that higher time frame trend line. And you can see right over here, let's just go ahead and delete that. Bring up this drawing tool, we can see again a break of this trend line results in a break over 74,000. So if we see the price action move up over here and that RSI is breaking outwards, there's a very, very high chance the price action will follow through and break through 74,000. Again, this is reflective of the momentum within the price range since the break out of 60k. You can see the break of 60k over here, reflective by this RSI retest, and then our first high, which is our bearish divergence. This retest, that trend line's dragged a cross representative of the momentum from this range onwards, which has been falling. So we do see that RSI trendline break. Again, the momentum within this range will flip positive, and that will likely take us above this prior high, which we can see on the RSI over here and the price action chart. So for the bullish case scenario, we need to see the RSI trendline break on the short term, on the higher time frame. For the bullish case scenario to take us up to 74,000, we need to see a break of 69,000. And for all of those things to occur, we absolutely need to hold the support at 64,550. This support needs to hold. Now, let's talk about the bearish case scenario, guys. If we do break down from that support, let's say we do not manage to hold this short-term support on the price action chart. This is where it becomes a little bit more sketchy. But as we've said already, the most important chart in terms of macro support is still going to be that 60k level. A loss of this local low over here would result in a correction back to retest that 60k level, which we can see in the price action chart, would likely result in the weekly candle closing underneath the current prior weekly all-time high in terms of the highest weekly candle close. This, of course, would be bearish, putting the candle back into the 60k zone. Now, it is only if we lose that 60k zone are we exposed to massive downside risk, as we can see the VIPV gaps from around 61.8 all the way down to 52,000. So we have an area between that range, and this is about, let's take a look at percentage-wise, this is about a percent range of around 15%, with a 15% range where we have low historical trading resistance. This is a low volatility range, okay? A low volatility range meaning the volume requirements that a price action to push from 60,000 to 52,000 is quite low, meaning we would expect a massive surge in volatility if this area is lost, and that volatility would be downside volatility. We would be expecting a correction down to around 56.2, potentially 58,000, even lower if we do break below. However, like we said, this scenario here is unlikely provided 60k holds as support. That is going to be the bearish case scenario. Now, there is one more trend line I do want to discuss, which is this uptrending support line. This uptrending support line has been present ever since the early Feb. So 7th of Feb, we retested it once. The second time we retested it over here on the 27th of Feb. And the third time we retested it was recently, a few days ago. So we do have a very relevant uptrend. And as you know, guys, the trend is your friend until it ends, and you have to expect the trend to continue provided we are sitting above that trend line. So if we do see what we said on already on the short term, a loss of that level resulting in a breakdown to 60, the breakdown to 60 would as a result break us down from this multi-week long uptrend, around a 6-week long uptrend, which would be very, very bad for Bitcoin and increase the likelihood of that correction downwards. So Bitcoin is not out of the woods of a correction. At the moment, a correction is unlikely unless the 60k region is retested / lost. If we lose that level, bang, expect a correction 100%. We are expecting that correction. Until then, we have multiple levels of support that could result in a bounce. The bounces have not been strong enough to really drive back the strength in the price action. We have really not got that strength yet to continue, above 69k or to 70k or to create new highs. We haven't got that yet, but we also don't have the confirmation that we're going to see an extended correction at the moment. So very much in this chop zone, in this danger zone. That's what we said at the start of the video. We are in this indecision zone. We are in this danger zone where, depending on the directional break we see on this weekly chart, is very likely to determine the next week or so, or even month or so of directional price action for Bitcoin. So let's now throw it back to that macro chart. Taking a look at the monthly chart, like we said already, if we look at the 4-year cycle, more specifically just a monthly structural chart, we can see that every single time we close a monthly candle above that prior all-time high, that is when we really enter that parabolic phase of the next cycle. The bull run cycle, that parabolic phase of the cycle starts, we break a monthly candle above that prior all-time high. So the prior all-time high is sitting at 69,000, and we do have on the monthly chart around 10 days remaining. Now, like we said already, if we close a weekly candle above 69,000, the likelihood that we close a monthly candle above that level significantly increases, and thus the likelihood we enter that parabolic phase significantly increases. Of course, if we fail to close a weekly candle above this level, it could drag out for another 2 months before we get back up to that range to retest it. So a lot is actually writing on the next 3 days, and specifically the next 10 days for macro directional moves for Bitcoin in terms of the next 2, maybe even 3 months of price action. A very important time. We're definitely in this danger zone, and it is definitely an area you should be paying very, very close attention to. With that being said, guys, we're going to go ahead and wrap up the video. I hope you enjoyed. If you've got any questions, let me know down below, and we'll catch you guys in the next one on Sunday. And by then, we'll be 1 day out from the weekly candle close, and we'll have a very, very detailed and honed in estimate of where we're going to see that candle close at. So we'll catch you guys in the next video. Have a great rest of the week. We'll see you then. Bye.